Good morning, good afternoon, and good evening. It is really exciting to see so many of you here for what promises to be a really great hour. I'm Julie Morton, and I lead Chicago Booth's Executive MBA program, and I am delighted to welcome you to the second Faculty Fireside presented by Chicago Booth. This series delivers high-level conversations between renowned Booth faculty members and leaders of industry. We are delighted that Steve Kaplan and JP Gan are presenting today on the new normal, the future of venture capital in Asia. Before we dive in, let me highlight just a couple of points. Entrepreneurship is in our DNA at Chicago Booth. In fact, the University of Chicago was founded by one of the United States' original entrepreneurs, John D. Rockefeller. Today, entrepreneurship is the largest concentration amongst our full-time MBA students, and it's a keen focus of many of our executive MBA and part-time students. With campuses in Hong Kong and London, in addition to Chicago, we are truly a global school, and the interest in entrepreneurship is global as well. The Polsky Center for Entrepreneurship and Innovation is an important resource, not only at Chicago Booth, but for the entire University of Chicago community. The Polsky Center applies world-class business expertise from Booth to bring new ideas and breakthrough innovations from students, faculty, staff, and alumni to market. Steve Kaplan, whom you'll hear from in just a minute, established the Polsky Center in 1998 and now serves as the center's faculty director. Steve has led the Polsky Center to be recognized as one of the top graduate programs for entrepreneurship in the US. Steve also created the New Venture Challenge, which is a top-ranked accelerator program and one of only 2 university accelerators in the US, recognized alongside other prestigious accelerators such as Y Combinator and Techstars. The New Venture Challenge helped launch more than 330 successful companies that have gone on to raise $1 billion in capital and returned over $7.5 billion in value to investors. These include well-known companies such as Grubhub, Braintree Venmo, and Simple Mills. This year marks the 25th anniversary of Polsky's capstone program. More broadly, all of us have certainly experienced a challenging year with COVID, but we're really proud of how Booth and the university as a whole have responded. Classes have the same focus on critical thinking, and the community has pulled together while maintaining social distance, of course. And we've all benefited and enjoyed the ease with which we can do events like these. Today's audience includes Booth alumni, current Booth students from the full-time, evening, weekend, and executive MBA programs, and prospective students. There'll be 3 people speaking today: Steve Kaplan, JP Gan, and very briefly me. All other participants will be muted. However, we'd like you to participate by asking questions. To do that, please type your question into the Q&A box at any time during the talk. The session will last for 60 minutes. JP and Steve will speak, and then we'll have time for plenty of questions from you. The webinar is being recorded, and we'll make it available to you on our YouTube channel. With that, let me introduce Steve, who then will in turn introduce JP. A Fortune magazine article referred to Steve as probably the foremost private equity scholar in the galaxy. Business Week named him one of the top 12 business school teachers in the country. I wasn't kidding when I said we were in for a great hour ahead. Steve is the Neubauer Family Distinguished Service Professor of Entrepreneurship and Finance and the Kessenich EP Faculty Director of the Polsky Center for Entrepreneurship and Innovation. Steve conducts research on issues in private equity, venture capital, entrepreneurial finance, corporate governance, and corporate finance. He's a research associate at the National Bureau of Economic Research and an associate editor of the Journal of Financial Economics. He's the co-creator of the Kaplan-Shore public market equivalent private equity benchmarking approach. Steve teaches advanced MBA and executive courses in entrepreneurial finance and private equity, corporate finance, corporate governance, and wealth management. He's been a member of the faculty since 1988, and he also serves on the board of Morningstar and several fund and company advisory boards. Steve, thank you for being here today, and the Zoom is yours.
Great. Well, thank you, Julie. It's great to be here. And it is my pleasure to be here with JP Gan. JP is a friend, and he is is remarkably impressive. So let me tell you about him. He's a founding partner of INCE Capital, and he is absolutely one of the top venture capitalists in the world. The Forbes Midas list, which ranks VCs every year and is probably the preeminent ranking, has put JP among the top 40 VCs in the world 5 years in a row. There aren't many people who've done that. He was in the top 5 in 2019. So just unbelievable. And what does he do? He focuses on the internet, consumer, and intelligent technology sectors, and hence it's part of the reason for the name INCE. And his successful investments include Trip.com, Bilibili, Dianping.com, which merged with Meituan, Musical.ly, which was acquired by ByteDance, which you may know by the name of TikTok, and Meitu. So that is quite a track record, and partially as a result of that, JP is known as the unicorn hunter. He's had lots of unicorns that mean billion-dollar valuations. Before founding INCE, JP was a managing partner of Qiming Ventures, and before that, he started his career at the Carlyle Group and was a founding member of Carlyle's venture fund. Before that, he got a BBA at the University of Iowa, and he got his MBA from Chicago Booth. He's been active with us. He's a member of the University of Chicago Booth Council, as well as the Polsky Center Council. So please join me in welcoming JP Gan. So I'll clap since you all can't. So now I'm going to ask a bunch of questions, which will go from general about venture capital to investing, to the markets, to the future. And then later on, I'll start looking at your questions. So JP, 2020 was a crazy year. There were highs and lows. Let's start with the lows. What were the lows in venture capital in China, and how did you deal with them?
Right. Thank you, Steve. Thank you for having me. Well, if we have to talk about low, I think it was probably, I think January, late January, when the Chinese government announced to lock down the city of Wuhan, basically sealed off 15 million people from the rest of the world. That's probably the lowest low, not just in venture capital, but in China and in the world. And as we know, that has developed over time. So I was actually planning to travel overseas for the Chinese New Year, and I stayed there. I just stayed overseas for almost 50 days. I think during that period, pretty much the whole country was shut down. Not just venture capital, but any kind of investment activities. All the restaurants and bars were shut down. For a couple of months, and there was obviously a lot of uncertainty at the time. Since I went through SARS in 2003. I actually was a lot more optimistic than the general population. I thought this will pass very quickly. But nevertheless, it's lasts much longer than I thought, and probably lasts much longer than a lot of the experts thought. And we were since everybody was locked at home, so we start doing a lot of research. So we start thinking about what industries will actually benefit from the SARS situation, and a few guesses were online education is going to be popular. Anything related to biotech, right, is going to be good investment. any productivity tool to help you to work from home or study at home will be popular. So we actually went on and invested in some companies that have benefit from the situation, including one virtual online teaching platform called Classing that's very popular among the after-school tutoring institutions, as well as universities, colleges, and high schools.
You made those investments during 2020?
No, we made a lot of investments during 2020. So my team actually, was doing research, and then we see this Classing platform that were being used by, well, as you probably know, there are a lot of after-school tutoring institutions in China, basically helping kids to do better in tests, in exams. And because of the COVID, they could no longer have physical, classes. So they were basically forced to move online. If they don't do it, they will be losing a lot of money. They will, basically go broke, right? And this company that we invest in, had a relatively small amount of revenue in 2019, but then all of a sudden, their revenue in the month of February is 1.5 times of their revenue in the entire year of 2019.
Wow.
And my partner in Beijing happened to know them. We went there very quickly and made an investment in that company.
Very interesting. Very interesting. So that was were your companies, the existing investments, how were they affected?
Well, again, the ones that have physical locations or offline, retail shops or factories, obviously have had a lot of problems. We have a company that does overseas car rentals. So it's a platform for Chinese to go overseas to rent rental cars. It's kind of like a booking agent. That company's revenue basically disappeared overnight. So it was very sad. I'm good friends with them, but they were actually much stronger than what I thought, and they keep on trying to figure out different things, doing different things, and nevertheless they're still around. They survived actually.
So do you have
Yeah.
Go ahead, sorry.
But the one that has a lot of online presence, like the company you mentioned earlier, Bilibili, their internet traffic, went through the roof. Everybody is staying at home, playing with their phone, doing all kinds of things online, playing game, looking at the social media, online video, online dating. All those companies are doing really, really well.
So what fraction, I mean, I did a study of actually US and global VCs where I asked them what fraction of their companies were helped, what fraction were sort of in the middle, and what fraction were hurt. Do you have a sense of that in your portfolio?
Well, I'm more of a digital guy, internet guy.
Right.
So for me, actually, probably more than half of my companies were actually doing better in a way that I'm proud of it. I'm happy with it. But of course, that's not something we wish for. But for the ones that invest in maybe offline retail or factories, for that type of investments, well, obviously didn't work, right? The whole restaurant industry was pretty much shut down, and was very painful for those entrepreneurs.
Interesting, because and the survey I did, it was roughly half the companies, the VCs said it helped, and 40% it was sort of neutral, and 10% it really hurt. So it was kind of, and this was in July, so it was after the worst, but we were still in it. So it was pretty positive for the venture industry, and then of course, like, it's only gotten better since then, particularly with the markets. Very interesting. Okay, so now that's what happened. What's going to be permanent? What's temporary and what's permanent?
Right. Well, I think the whole travel industry is going to change dramatically. The whole idea of business travel, I think, is going to change quite a bit. I'm kind of the guy, and all my partners and colleagues on the industry probably would not hesitate to hop on a plane to meet with a good company or entrepreneur. I think not only just in China, but also in the US, right? People just travel all the time. But nowadays, given the virus situation, people are more and more used to using Zoom, using Microsoft Teams, and it seems like a lot of things you don't need to really travel, right? Just for event like today, I'm sure before virus, you would probably propose for me to fly into Chicago. We're sitting on a nice campus. We have a group of audience. Have a coffee before that and a drink after that. But right now we're online. I think we had almost 300 participants. So this seems to be working. So I think business travel activities will be substantially reduced.
Does that mean, I was supposed to come to China last June. Does that mean you're not going to invite me now?
Oh no, of course you're always welcome. And I think a lot of people are really, kind of fed up with not being able to move around, right? I think there will be some bouncing back.
But not to the same extent. Interesting. Go ahead. Sorry.
I was talking to some urban hotels are tailor-made business travels for conventions, right? But they're really, really worried. I think they need to basically come up with a new setup to attract tour leisure travelers. Sometimes offer packages over the weekend for the urban residents to get away from home and check into nice 5-star hotels. So I think this whole thing is going to change dramatically. And also, I think there's been a lot of attention to biotech companies. And this is probably going to have a lot of impact on the industry, investment in general. Food delivery, online grocery, that becomes very, very popular. I'm an investor in one of the largest, actually, 3 of the largest grocery delivery companies in China. I keep on trying to get my parents to try that before, and they was like, "Oh, this is not good. Stuff not fresh. I don't want to wait around for someone to deliver. I'm happy to walk over to buy my grocery every day." But with the COVID situation, they have learned very quickly. I mean, they know exactly what to do, and they're getting used to having grocery delivered to them. And I think this whole e-commerce sector has been growing rapidly, but I think the COVID will accelerate the growth of those industries.
So 2 questions about that. First, are you doing biotech? Have you done biotech in the past? Are you going to be doing it, or will that be other people?
Right now we don't focus on biotech.
Right.
As a VC fund. But I personally have been, involved with some of the opportunities. My previous firm is one of the biggest biotech investors in China, and I've been, on the investment committee for 13 years. Probably have reviewed and vetted hundreds of biotech companies.
Very interesting. And on the, the areas where you're investing, what do you see as being exciting or different? Is it just more of the same, accelerating what you've been doing, or is there's something different on the horizon? There like a next breakthrough?
Well, I think the whole digital world, the internet, anything allow people to be more efficient, to save time or kill time, virtually online, will be very, very popular. As we talk about the digitization of pretty much everything, is going to be very, very popular. People are going to spend more time, not less time. No matter what you think, people are going to be more glued to your phone. And people will be doing more things, buying more things on that little, screen. I think there's absolutely no return. So we continue to be very interested and excited into social network, social media, e-commerce. You probably have heard of this application called Clubhouse, right? In the US. It has overtaken a huge portion of of the white collar users, and more movie stars, entrepreneurs, professors are given talks on Clubhouse. Some people spend hours on Clubhouse. I think we'll see more interesting applications like that that get more of people's attention and time spent. And the whole, we talk about the biotech, right? As you probably know, there have been two companies that were pioneers in this whole vaccination business. One is a German company called BioNTech, which is basically the technology provider behind Pfizer's vaccine. And there's another company called Moderna. Both of them have been around actually for quite some time. I think BioNTech went public in 2019 at the stock price about $15, maybe a few $billion market cap. And they were pioneer in this mRNA technology. They didn't have $1 of revenue until last year, and they were the first one who came up with a effective vaccine using so-called mRNA technology, and the stock price went through roof. And right now it's $25 billion company, and Moderna is a $60 billion company. I think even 2 years ago, people were still thinking this is much farther than a lot of people thought that could be used in human bodies. It's more still at kind of a clinical trial stage. But boom, all of a sudden with the virus, that whole development got accelerated by probably a few years. They're producing billions of doses now. It's being delivered to a lot of people. The whole country of Israel is pretty much fully vaccinated. And the data has been very, very positive. And maybe it was a quarter of the US population got vaccinated, and then we maybe go back to normal. I was talking to Julia earlier. I'm very optimistic that everybody should be able to return to campus, right? Start really taking classes in on this beautiful campus.
Good, very interesting. Now, how about, to give you one other one, and then I'm going to go into what you do with investing. With the Coinbase IPO coming, do you have a view on crypto, blockchain, Bitcoin?
Right. Well, I think Bitcoin itself has proven to be a asset. Given the limited quantity in its algorithm, right? So it's similar to gold and to diamond and other precious metal. I think Bitcoin itself has proven that it could be a asset class. And once it becomes an asset class, and for any wealthy people like you, Steve, that you have to think about asset allocation, and more people will start thinking allocating a portion of the asset into the so-called crypto, and the whole crypto and blockchain have been used in the financial industries. We talk about DeFi, SenFi, right? Decentralized financing, centralized financing, all that. But my biggest question and the concern is still, other than finance, it doesn't really have any other real life business application. At least I have not seen it. All the blockchain crypto companies are around, exchanges, trading, different currency, different kind of financing, lending. But outside of that, I have not seen a real business application. But again, as a VC, I have to keep an open mind. I actually been spending a portion of time learning about crypto, blockchain, just because I need to be on top of that in order to watch out for the next wave of innovation and technology advancement.
Very interesting. I have a funny story, which I won't tell fully, but my son made me buy Bitcoin when it was 400. And I bought some. He told me to buy 10 times as much, and I didn't. And I should have listened to him. So that was when he was 16 when he told me to do that. In any event, so that was good. So now it's a good segue for.
I'd love to hear what your thoughts are on crypto and Bitcoin. What do you think? Well, you already made money on the token, right?
So my view on Bitcoin was that it's a real thing. It's just like you said, and as long as people believe it's real, it can last forever. Because if you go back, actually, the United States, the currency in the United States in the 1600s, wasn't the United States then, but it was in the colonies. The currency was wampum, and wampum were like these little shells that the Indians used. And that currency lasted for 100 years until the technology changed where they could make it very quickly. And then it blew up. But with Bitcoin, you can't do that because it's the supply is limited. So it can last a long time. And I believe that for a long time. Now, what it's worth, that's a different question. Is it worth 50,000, 10,000, whatever? That's much harder to say. That it's worth something, like sort of like gold. Absolutely. So I think it's not going anywhere as long as it doesn't get regulated out of existence, which I think is increasingly unlikely. So let's move. So now you were talking about what you're looking at, how you pick companies, and you've been called the unicorn hunter. So clearly you're good at finding companies that become very valuable. How do you do that? Where do you look? I mean, that was one of the questions too that is up in the Q&A.
Right. I actually do a lot of top-down research. So we actually do it the Chicago way, right? Everything has to be backed by numbers. We come up with the hypothesis, and then we do research and look at numbers. We do top down. We look at the demographic, the labor force, the general population, their preference, and then we drill down on different sectors to invest. Sometimes the opportunities is not as obvious to Western investors as for those of us who are on the ground. Basically 20 years ago, it was all about consumers. it was all about a relatively poor population start making more and more money, generating more wealth, and start spending more money on many different types of things like high-end products, luxury products like travel, buying cars, and driving cars, and go around the country like what Americans did. We were invested in one of the largest motel companies 20 years ago. At the time there was a lack of consistent quality type of lodging, as they are called motel in the US, for maybe $20-$30 around the country. So we're investing in a company called Home Inn, which has become the largest motel chains in China. And also Ctrip, which basically provide a booking, a travel reservation system for both business travelers as well as leisure travelers. I think so for a while it's all about consumers. And then starting in 2010, as you probably remember, Apple introduced its first iPhone in late 2007, which basically revolutionized this whole mobile or wireless internet world. It was very obvious to us that mobile phone is going to become the major internet access device for the vast majority of the world population, and especially in China. I actually, wrote a presentation as a, kind of investment strategy for the firm called, Nothing But Mobile, back in 2010. So we basically have invested in everything related to mobile phone. And we summarize that there are a few things that mobile internet is different from PC internet, right? One is location based, and two, it can be used as a camera. So anything related to pictures pictures or videos are going to be important. So we have made quite a few of hypotheses about what people are going to use mobile phones for. So I think in the last 15, 20 years, 15 years, we've been investing very, very heavily into different types of mobile phone applications, app, and many of them become very, very popular, including a company called Dianping, which started out as a restaurant rating company, a PC website. And once mobile came, it just found its angle, and it allows people to find restaurants, movie tickets, and right now almost everything on your little screen. You can get your food delivered to you, you can get your grocery delivered to you, and you can buy movie, concert tickets, with a few touches on the screen. And that company becomes a $200 billion market cap company over the years through mergers and acquisition. I mean, this is basically what we've been doing. Right now, one of the things that everybody is thinking is about declining population or declining newborns in China.
Mm-hmm.
That is a huge demographic change, started probably 10 years ago. And 2020 was the lowest of the low. It was only 10 million babies were born in China in 2020, which is about 20% decline from 2019.
Wow.
So there will be a kind of a huge clip, right? 20 years from now, there will be shrinking labor force. Actually, many of the schools are going to be obsolete, given the shrinking new students. And we've been thinking about what we are going to do about this shrinking population. Automation obviously is important,
what about AI and machine learning? Nick Alexos, hi Nick, he asked that question. Machine learning AI, does that play into this?
Yes. Well, I think machine learning and AI has already developed quite a bit, very rapidly in the last few years. Facial recognition is being widely used in China for many things. I don't want to talk about the privacy issue or anything.
All right.
But nowadays, if you don't allow facial recognition, it's very difficult for you to go around, especially with the COVID situation. You have to show your health code, and they scan your face, and that's basically how you get into any office buildings.
Interesting. And are you? So go ahead. Sorry.
Yeah. No, go ahead. Well, yes.
So and will AI? So you're looking at that kind of AI, anything like where it's going to go in the next 3 to 5 years?
Well, in a way, AI technology is pretty well developed, and in a way, it's matured. We talk about autonomous driving, right? If you talk to a lot of the technologists, they think it's ready. You can deploy, autonomous driving truck, taxis, and Tesla basically is already enabling level 4 driving on its car. If you tried it, in general on highway, you don't have to touch the wheel. And I think what's lacking is actually regulations and laws and regulations to enable autonomous driving technology to be widely deployed. There are a lot of moral issues that I think the general public needs to think about it and debate and decide, in a split-second decision, what is the instruction to the machine. But yes, it's very expensive now. I think one autonomous driving car costs maybe close to $1 million to equip. But with mass production, everything will become very cheap. In many ways, it could be used today.
Interesting.
In some of the cities in China is already trying, kind of a robot taxis already. The Google autonomous driving cars has driven millions of miles with much lower accident rate than general human beings. And most of the accidents they do get into are humans' fault, right? Not the technology's fault. So in a way, I think the AI, the machine learning technology is very well developed. It can do a lot of things, but the laws and regulations would not allow them to do all those things. For instance, like reading, X-ray, right, or scan. In a way, machine has done better than humans. Just because humans get tired. If you look at so many pictures every day, you get tired, your eyes got fuzzy, but the machine won't have this problem.
So now I'm going to move to the next thing you do. So you have this top-down view, where you're looking. How do you decide which companies to invest in? What do you care about most, or what are the 2 or 3 things you care about?
Right. So we picked the sector, right? I think that's something that we do foremost. It's probably the most important thing. We try to pick the right sectors, and then we look at the subsectors and trying to find the early mover in those sectors. If not the first mover, but second mover. Then we spend a lot of time review the product, the technology. and then we need to decide on the entrepreneurs. All those can be done relatively easily. Review technology, review product, look at the layers of software and how they manage the software or AI algorithm. Those all can be done relatively easily. But the more difficult thing is evaluate entrepreneurs. Everybody says, VC investing is about the people, about entrepreneurs. It's absolutely true. The success is driven by a successful entrepreneur. But how can you tell just by meeting him or her a couple of times, even 5 times, right? How can you tell who is going to be a successful entrepreneurs? Elon Musk is getting a lot of attention, right? But if you rewind to who he was 20 years ago, you may or may not be able to identify him as the best entrepreneur, right? If Steve Jobs come to you right after college, more likely than not, you will not invest in this guy, right? He was a college dropout. He was doing, a lot of he had out of where child. He has all kinds of problems.
He didn't take showers, as I recall.
Exactly, right? So why would you invest in a guy like that? Actually took him a long time to prove him. He was fired once, right? Actually took him, several tries to become who he was, and to show the world, what a good entrepreneur was. So I think we, of course, pay a lot of attention to the human side, but we try to do, more of an elimination. There are certain types of people that we don't want to invest with, and there are certain type of people that we like to invest with. But by the end of the day, only time can tell who are the great entrepreneurs and who are not.
Is there any one characteristic? Is there any one thing you look for?
Well, yeah.
Or that eliminates you? What eliminates you? I had someone who said somebody who doesn't drive fast, he eliminated because they were too cautious. But
I think integrity is very important to us.
okay.
So people who needs to be honest, has high integrity. It doesn't mean they are not going to be successful. Well, there are a lot of nasty people who have made a lot of money. But the problem is, they may make money, they may get rich, but usually they're not going to let investors to make a lot of money without certain honesty, integrity, and a respect for rules of law.
Interesting.
And for one thing that I always want, and I think that most of the successful entrepreneurs I have, is passion for what they do. And people express their passion in different ways. But in general, people are, the good ones are passionate about their product or their technology, or some people are just passionate about competition. They just love the game and love to win. That could also be very important. Being an entrepreneur or starting companies is a long marathon. It takes a long time. Without passion, it will be difficult to stick around long enough.
Now, did you have more trouble evaluating people this year with COVID, particularly since it was probably more on Zoom, or did that not matter?
Well, actually, I think in a way it's easier, just because people tend not to leave their corporate jobs during a bad situation. The ones who do leave their corporate jobs are the ones who do want to raise money and expand their business are in general more passionate or more aggressive or more excited about what they do.
Wow.
Yes, not having face-to-face meeting is less effective. but still in a way that kind of filter out a lot of the not so qualified entrepreneurs. Yeah.
Interesting. So now here's a question that's related to this is from Wesley Suan. What separates a good VC and a great VC in China? Because you're a great VC. So what's the difference between what makes someone a really good VC?
Well, I think we talk about the being sensitive to the market change, as well as innovation, technology advancement, demographic shifts, and all those changes around you. Being a VC, you really have to embrace change and uncertainty. Without change, without dramatic change, we're not going to have a lot of opportunities because the big corporate, big incumbents are going to be dominating. So you really have to love change. And also, in general, you need to be competitive. I think last time there was someone asked about fear of missing out. I think the question was asked me how to overcome the fear of missing out. I don't know if that was what you teach in class, but the reality is most of the my fellow VCs, the more established ones, have more wealth than they can spend. You don't come to work to make an extra dollar. You come to work because you love the game, you love to compete, and you have this fear of missing out, of not winning in the competition. That's what get me up early in the morning and go to the office and meeting, hundreds of new companies every year, and that's what gets me going, I think.
Very interesting. How many companies do you meet every year, and then how many do you invest in?
Right. So my team, we actually keep track of that. My team in general meets about 800 to 1,000 companies, and about 150 of them got discussed in our weekly meetings. And I meet about 100 companies. Then we issue maybe 20, 30 term sheets a year. And then we end up doing maybe 10 to 15 deals every year.
Okay, so 1,000 to 10, so it's like 1%. So it's a very, very steep funnel.
That's right, and I think it's very important for me to meet. I have a very broad base of meetings. It's important for me to talk to entrepreneurs, to listen to what they're thinking. Trying to find some patterns. Right, it's basically the top-down research to drive the direction, and you need the bottom-up intelligence to find the right trend and to fine-tune your strategy and model, as well as find the best companies and entrepreneurs.
Very interesting. So let's see, we've got a few minutes left. Let's go to the VC industry. How have returns been in Chinese VC the last few years, and what's going to happen going forward?
Well, I think the last few years has been the golden age for the Chinese as well as American VC. Actually, last few months is probably absolutely the best time I have ever seen in my 20-year career.
It is, because you started after the .com boom. This is
exactly.
This year, I mean, people don't realize it yet. It's going to start showing up in the news. This year is the best year since, it's like 1997, which was like unbelievable.
We don't know, right, Steve? You don't know if it's 1997 or 98 or 99, right? I agree with what you said, but you don't know.
What? No, I mean, the up is going to happen. The down, I don't know, but it's like.
Right, exactly, right? I mean, you don't know if it's 1997 that when it all gets started, or when it's 1999 that will crash.
Right, exactly. I mean, the difference is the companies are real, right? For the most part, right? 1999, I mean, you were just starting, but they were, they were just not anything. And now they're real companies. They won't die. Value may go down a little, but they're real companies.
Well, I think in the digital or technology world, a lot of them are absolutely real companies, with hundreds of millions of dollars in revenue, hundreds of millions of customers, users. But the IPO market has been great, right? Every single IPO went up almost, as far as I remember. One of the short video company that compete with TikTok in China called Kuaishou just went public about a month ago at about $80 billion valuation. And the first day, it almost tripled. It became, a $200 billion company, one of the, biggest company in the world in terms of market cap. And that was a huge IPO, right? It's not like it's thinly traded. And also in certain sectors, maybe in the, SaaS or even in the biotech sectors, there are a lot of companies that went public and the stock price, double, sometimes even triple. Honestly, I have some concerns. But again, I'm a VC, so I'm not very good at predicting the market trend. Otherwise, I will be doing this. I think a lot of that is driven by the liquidity, the money supply, right? Well, Steve, what do you think? Love to hear your thoughts.
On the money supply and interest rates. So we're talking again, anybody who says they know what's going to happen, has a 50% chance of being right. I mean, nobody knows for sure because it's very hard. I would say, the people who are worried about, inflation getting really bad and interest rates going up a lot, at least one of my colleagues who's been very good at predicting this over the years thinks, there'll be some uptick, but he's not so worried, at least right now, about a lot of inflation. It may, he puts some probability on it, but not a high one, which means it'll, that you won't have a crash, that it'll continue. But again, I don't think anybody, has more than a 55% chance of being right, because there is so much uncertainty, and as you said, it's very hard to predict markets.
I think you talk about unicorn hunters, right? I'm very proud of some of companies I invest in. But, we were joking around that nowadays, the unicorns are breeding like rabbits. Just because there's so many of them. I mean, unicorns no longer that big of a deal. I invest in a company that become unicorn in 6 months. They raise 3 rounds in 6 months and double valuation every single time. And I think I've done good job. I have some success and great Chicago education. But a lot of my success is also driven by the money supply, just because there's so much money chasing innovative companies and chasing assets. It's a lot of my success. Well, I won't say majority, but definitely a huge portion of my success and my fellow V success were driven by the money supply.
Right, so you have wind at your back, and so you're nervous now. Valuations are high. There's a lot of money, and the wind has already been there. So we'll see. It's clearly a concern. Let's see. I think we have. I said 2 more questions. So I'm going to ask you. I think we have time for 1 more. So last one. If someone wants to do venture capital in China, and there a lot of our students probably do. How do you get there today? What would you recommend somebody do, and what should they focus on?
Right. Venture capital is a industry that attracts people from many, many different sectors. And the VC's background is actually very diversified. There are people like me who have more of a finance background, and there are also a lot of people who have, engineering background. There are also a lot of people who have, corporate background. So it's very diversified. In a way, it's the easiest job in the world, right? You give people money. How hard is that? But on the other hand, it's really difficult. It takes a lot of diversified skill set to make judgment and decision with very little information. So I actually, in general, encourage younger folks not to get into VC industry, fresh out of B school or out of college. I think it will be helpful to get some real life experience in other sectors, whether it's corporate engineering, marketing, finance, consulting, so on and so forth, before getting into the VC industry. It's not something that can be trained. We don't have a formal training program, like the investment bank or the consulting firms do. We don't have a trainee program. It's all about learning on the job, and you have to really to be a good self-learner and quick study to do this. So I actually would encourage people to do something else before becoming a VC.
Very interesting. Well, I think we're out of time because Julie is here. I could have gone on for another hour. I have a bunch of questions I didn't ask, and the audience did too. This has been great. So thank you very much. And let's do this. Let's do this again. And let me turn it back to Julie.
This was amazing. Thank you so, so much. I wish we could go on for another hour. It was awesome. Super candid, great advice. Really, we could not have asked for anything better. Thank you both very, very much. It was recorded, so if there were parts of it that you want to go back and revisit, please do, and the recording will be available to the booth community as well. So we are very excited to have done this. So on behalf of the Chicago booth community, thank you both very, very much for joining us. Thank you to a very lively audience and a lively Q&A box as well. We know that especially now you have a lot of demands on your time, and so we are especially grateful to you for joining us. So thank you very, very, very much.
Thank you, Julie.
Thank you, Julie and JP.
All right, thanks, Steve. Let's talk soon. Bye.
Indeed, indeed.
Bye.
Bye-bye.